Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, stocks on Wall Street ended last week a fair bit higher. The Fed holding tight on interest rates and tapering. The S&P and the Nasdaq hit new highs during the session. What's the story on Wall Street, and what are we looking forward to this week?
Okay, well, the major U.S. indices, as you mentioned, the Dow had best week since March. It went, for the week, it rose 3.4%. S&P, it had its best week since February. It rose by 2.7% in the last week. And, of course, it had a record closing figure on Friday. Nasdaq, it was slightly down on Friday, less than 0.1%. But for the week, it rose by 2.4%. It was the best week it had since April. So why are all these U.S. stocks having such a good week? Well, the PCE, price, the personal consumption expenditure inflation figures came out last week, and the number was 3.9%. The core PCE inflation was 3.4%, so it was higher than it usually is. It's much higher than the 2% target that the Fed usually looks at. But if you look at the month-to-month figures, April to May, the figure was 0.4 for the PCE inflation and 0.5 for core PCE inflation, which was much less than expected. So the fear of inflation at least seems to be temporarily over. And then the U.S. markets seem to be discarding a lot of bad news. The Fed's noticed that the interest rate may go up earlier than expected. Consumer spending in May coming in less than expected. It did not increase, whereas analysts expected it to increase by 0.4%, and consumer income falling by 2.0%. These bad news do not seem to be affecting the stock market all that much. That may be because of the infrastructure plan that the Biden administration and the Republicans and the Democrats in the Congress agreed on. But even there, originally, President Biden wanted a $2 trillion infrastructure plan, but this infrastructure plan is only going to be $579 billion new spending. It's being billed as a $1 trillion infrastructure plan, but of that, about $420 billion is from spending that is already planned. So there will only be about $479 billion worth of new spending. But unlike the President Biden's original idea for the infrastructure plan, this new infrastructure plan will not involve any increases in taxes, at least for now. So that may have made the stock market more optimistic. Now, European markets, the DAX and CAC, it was fluctuating, but more or less level last week. So up and down, but basically level. FTSE UK, on the other hand, it has been rising for the week. Nikkei last week was mostly level, but Shanghai and Hang Seng, it was upward trending for most of last week.
And last Friday was a record for Korean stocks, too. The KOSPI, for the first time, closing above 3,300 points. Today it was slightly under that number. The KOSDAQ, though, rising again. Tell us about the domestic market.
Okay, well, KOSPI did fall by 0.95 points, or 0.03%. So basically, it stayed level. Individuals bought, institutions and foreigners sold. It was actually positive in the morning, but it fell in the late morning around 11 o'clock, and it could not make up the loss before the end of the trading day. But it is the second day over 3,300 mark, so that is psychologically important. But it does point out that investors seem to be running hot and cold. Whenever the numbers go up, people are all excited, but then once it goes up, they get nervous because, well, you hit historical highs, but you're not quite sure why. The coronavirus has not really improved the fundamentals of the Korean companies, but we keep on hitting all these historical highs. So there's more and more concern that perhaps the stock market is overheated. In the Bank of Korea's financial stability report that was published last week, it pointed out that the Korean stock market is rising higher than the U.S. markets, the advanced countries markets, and the emerging country markets, but the price-earnings ratio is on the lower side. So it was concerned that stock market as well as other asset markets like real estate may be overheated right now. KOSDAQ, it rose 0.57% today, ended at 1,017.91. It has continually been over the 1,000 mark since the 17th. Individuals and foreigners bought and institutions sold.
And now if we could zoom in on Korea's biggest company, Samsung Electronics, and the broader semiconductor industry. Shares of Samsung were climbing sharply late last year and early this year, and many had expected its share price to reach 100,000 won, but it stalled out at around 80,000. Tell us about that and what this might indicate about the chip industry, Professor.
Okay, well, as I mentioned in the last question, the stock market does seem to be somewhat overheated, but why isn't Samsung rising or semiconductor industry rising as much as the other stocks? That is a bit hard to understand. KOSPI and KOSDAQ right now are running about 45% above the pre-corona highs. I'm not talking about from the low bottom that corona hit, but in February, before the coronavirus hit, starting from the high point that we had in February, KOSPI and KOSDAQ is about 45% above that right now. But Samsung is only about 32% higher than the pre-corona high. Hynix is only about 21% above the pre-corona high, which is somewhat surprising because the semiconductor industry has been the beneficiary of the coronavirus. Unlike the other industries, which was adversely affected by the coronavirus, the semiconductors were actually helped by the coronavirus. So it is strange why these rises are not as high as the stock market in general. Some people attribute this to the fact that Samsung Electronics is the increased rate of the profits are not as high as some people hoped, or some people are blaming the short selling that started a month ago. Samsung has been one of the largest targets for short selling, though unsuccessful, I should mention. Other companies that have been targets of short selling were Hyundai Merchant Marine HMM or LG Chemicals, which is a bit surprising because, well, these companies, again, the merchant marines, there's a shortage of marine transport right now, so there's excess demand. LG Chemicals, even though the LG Energy Solution will be spun off, they still are owners of the LG Energy Solution, which makes electric vehicle batteries. So if anything, these companies should be stronger, but they seem to be targets of short selling. So it seems like the excess liquidity that we see in the economy right now is making people do some strange things in name of speculation.
Yeah, very odd choices for short selling, indeed, Professor. We'll have to leave it there for today. Thanks so much for sharing your insights on that. We always appreciate it.
Thank you.